Welcome back, everybody. Welcome back. Joseph James here once again. We're finishing up our live trade room. And as we always do, we're answering questions. We're reviewing all of our trades today. Boy, what a great day. What a great week. Now, if you came in earlier with us, if you came in earlier this morning, you heard us talking about what our plan was today. And our plan today was to consider what's been happening all week. What do we know has been happening all week? Trades early in the morning, slop and chop in the middle, and finishing with a bang. We began our day knowing that we had some really interesting news today that wasn't normally on a Thursday, mainly crude inventories. So jobless claims came out surprisingly low. Okay, we were worried about whether it would come above 400,000. That squashed that worry. The next thing was Philly Fed. Philly Fed, we knew was a manufacturing index we had to pay close attention to. And then, of course, the granddaddy, 11 o'clock. Now, here's the thing. Today, 11 o'clock this morning, we knew traders may be waiting for it all morning, which means we needed to really be patient. And then once we got to 11 o'clock, we had to be realistic because the bus comes at 7 o'clock every day. If the bus came late today, right, that's the kind of the analogy we use. Since crude oil inventories came in late today, we thought we might have missed it. We thought maybe the people wouldn't be at the bus stop waiting for the bus. So we had reason to believe today might be a slow day. We had crude rollover this morning. Okay, today's Thursday of OPEX, so it shouldn't be that bad. Okay, Wednesday is the worst day of OPEX usually. But boy, did we kick the day off with a bang. We came in this morning, and the first thing we saw was, again, very similar from one day to the next. This should look familiar. Wedges, wedges, wedges across the board. Now remember, guys, our exact words today. If I could trade one price structure the rest of my career, it would be an inside day wedge, and that's exactly what we got. We're going to get this price going from top to bottom here. So we knew right away I can buy a pullback above the 102.24, but I'm really going to be looking for a failure instead. And the big thing is I want to sell those highs. If this if this lesson right now sounds like it's a broken record from earlier this week, you're absolutely right. Because this is the exact same structure we saw Tuesday, Wednesday, and again this morning. So here we are. I jumped to my 34 range chart. My 34 range chart shows me, again, resistance up at the high of yesterday's range. Okay, really simple structure. This is something we look for every day. We love wedges, and we kind of joked about it this morning that while most of the major money managers and so-called professional traders out there are scared of wedges, we actually embrace them. We love wedges. You know why? Because wedges are clear signs of indecision. And whenever some indecision comes into the market, we can capitalize on it. So, of course, we begin looking at, there's our wedge high. Right? Here's our wedge high. And we know that we go up to the wedge highs. We already know, remember, being a day trader is all about disqualifying one direction. And that just makes it a whole lot easier because then you're not worried about the long side here. I'm not worried about the long side. I'm not trading long. So focus on the short side. There's the wedge highs. And again, I gave you guys the stop. If you recall, my exact words were, right, 102.30, get the stop up top here. Put the entry below that swing low there, right? 101.80, 101.85. And of course, where's the target? The target was down here at the open. So the first trade this morning was a big winner. And of course, it's amazing because once again, our biggest trades of the day ended up being the first trade and the last trade. It's been like that all week. I'll take it, guys. I will take it all day long like that.